Hey, soldiers, we're in the midst of a bank run. We are seeing deposits leave the banks by the billion. Why is this happening? Are people losing faith in our banking system? Actually, I think there's another reason. We're going to get into it. You got to stay tuned. Also, we're going to learn what the banks are doing about this, and we're going to take a look at whether or not we should actually learn from that and take a page out of their book and apply it to our personal financial situation. So look, before we get into it, hit the thumbs up. Guys, I really need you to help grow the channel. You've been such great soldiers about doing that. So continue to subscribe, hit the thumbs up, and share this content. The banks, check this out. Bank deposits have fallen for the 5th straight quarter. Okay, now we're going into almost 2 years with that, where we're seeing bank deposits fall. Why is it happening? We'll get to it. The decline was mostly driven by uninsured deposits, or those exceeding $250,000. What do they mean by that? Well, people are saying, look, we've seen some banks fail. We heard Janet Yellen say, I'm not going to guarantee that if you've got over the FDIC insured amount, you're going to be guaranteed anything over that limit. She said that going on maybe almost a year ago. She made that clear. And apparently people are listening and saying, look, I'm going to either take some of this money, put it in another FDIC insured institution, or put it into play in some other way. Okay. Why are they doing this? Well, they looked at companies like Roku, who had an account at SVB Bank. Roku had $500 million in a checking account at SVB Bank. And of course, they would have lost most of that, all except for $250,000, if that bank had been allowed to go under in the way that it should have. And what way is that? Well, insuring those depositors up to $250,000, and that's it. So a lot of people apparently have learned from that. Deposits at FDIC insured banks were down for the 5th straight quarter in the period ended June 30th, while net income fell by double digits. The FDIC's latest quarterly banking profile showed. So we've got that going on, okay? We're seeing where these banks are under pressure, where money is just leaving. And that's the lifeblood. They can't really do as much in terms of loans if that's happening. Now, why is this occurring? Well, part of the reason, and this is kind of taking a look at the regional banks, although some of the nationals are beefing up as well. They made a lot of commercial real estate loans, and we're seeing that sector under tremendous pressure. So what are the banks doing? Well, they're hoarding cash. U.S. banks hoard $3.3 trillion in cash amid fears of an economic slump. There used to be this financial services company called E.F. Hutton, and they used to say when E.F. Hutton talks, people listen. E.F. Hutton was the creator of the Index Universal Life insurance policy, by the way, just in case you ever on Jeopardy. Now you know. Anyway, listen, when these banks are talking, when they're making these moves, we got to pay attention to what they're doing, because it's forecasting what all of these multi-million-dollar supercomputers that they have, all of these MBAs and Harvard and Yale grads and insiders, they tend to know it before we do. So let's look out and use them as prognosticators. And again, one of the purposes of this channel is to get people to think about doing things that hold you in good financial stead no matter what happens. So owning quality assets is going to be a good thing in good times and bad times. All right. So we're not doom and gloom. We're all about preparation. Since the collapse of SVB and Signature Bank in March, U.S. banks have become cautious on lending. They're holding a cash pile of $3.3 trillion amid fears of an economic slowdown, i.e. recession. The sector remains subdued banking after Moody's slashed the credit ratings on 10 U.S. banks in August, and we reported on that. Now, if you look at this chart, we see that the consumer is under increasing pressure with regard to credit card debt. We see that credit card delinquencies, they're increasing. Okay, people are finding it more and more difficult to pay the bills, especially as those credit card interest rates rise with the the rates that the Fed sets. Okay, so this is why we're seeing outflows from the banks, because all of the savings that people were able to rack up during that whole 2020 imbroglio, now those savings are being depleted because we got high inflation, because we got increased interest on the credit card bills, because we've got the student loans that are starting back up. And in many cases, people overextended themselves and purchased things like expensive cars that they're trying to hold on to. So that money's flowing out of banks and is being used in a lot of cases. Okay, it's not like people are taking it home, putting it under their mattress. No, they're using it. So what can we do to actually shore up our own financial position? Well, we could take a page out of the book that the banks are playing by, their playbook. And what we can do is say, look, we need to cut expenses, but we also need to conserve liquidity. All right. We need cash. And when I say cash, please don't mistake that for meaning bring a whole bunch of cash home and put it in your closet. No, I'm just saying that you need to consider having liquidity. Again, that emergency account, we did the video on that. You need to be able to have that somewhere. It could be in quality stocks. Okay, it could be working for you, but you need to have increased liquidity as we go into this rough water situation. Why? Because if we are headed into a recession, or if we are in one and it's going to get worse, then that means we're looking at possibly increased layoffs. Okay, Jerome Powell may continue to raise interest rates. If he does, okay, money's going to become more expensive. If he doesn't, then inflation is going to stay elevated. So we're going to need that money to ride this out. And we also want to always, as soldiers of finance, this is something we always want to do to some extent, purchase assets. We've talked about the ability to buy fractional shares of stock for $5. There should never be a time where you haven't researched and done your due diligence on an asset and been able to purchase an asset to some degree, especially in a recessionary time when assets may decrease in price. Buy low, sell high. All right, guys, listen, I want you to watch this video right here. We're going to go into some more factors around how you can increase your financial security and wherewithal, even in these times. Guys, I'll talk to you soon.